Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our Senior Economist, Bob Cunneen. Welcome, Bob.
Thanks, Sinead.
Bob, in recent weeks we've seen the US impose protectionist tariffs, and now the Chinese have retaliated with some tariffs of their own. Can you give us an update?
Yes, so President Trump started the ball rolling, announcing tariffs on approximately 50 billion of Chinese imports. But the first starting point was July the 6th for 34 billion worth and an extra 16 billion at a later date. Now, China has retaliated so far with the equivalent, but President Trump has threatened to escalate this issue to another 500 billion or so of Chinese imports. So we've got this process of escalation and retaliation, which makes it a real concern for the global economy.
So emerging markets have continued their slide throughout the month of June, and we saw the SSE composite, the Chinese index, down 8% for the month. Was that driven by these trade wars?
Definitely, yes. So Chinese share market is the epicenter of these global trade concerns. So what you saw with the Shanghai share market down 8%, even the Hong Kong Hang Seng index was down 5%. These reflect these concerns about America shutting its borders or making it more difficult for China to export to the US. And because of that, it's had implications across Asia. So you've even seen Korea and Thailand share markets fall in sympathy to what's happening in China. So what is a concern here is that this is a disruption to the whole global supply chain. And America thinks that it can pick particular countries to threaten tariffs, but it actually causes tension across the world. And so America needs to be careful.
And yet, when we look at developed markets, performance for June was actually marginally positive.
Yes, this is the surprise factor here. The American share market made gains, but the American share market's gains are reflecting of the strong corporate profit story so far. So corporate profits for the year to June expected to rise 20%. That's largely on the back of a strong US economy plus the corporate tax cuts. But eventually, if there are these global supply disruptions, a number of American companies will start to struggle in terms of their profit performance. So Wall Street will not be completely immune, although so far it has proven resilient.
And Bob, what about the Australian market? How's that performed?
Well, the Australian market did extremely well. It was up 3.2%, but we had a couple of sectors that really outperformed quite strongly. So if we looked at information technology, strong gains, even the energy sector in Australia did well because essentially the global oil price picked up speed. And
we saw the Australian dollar fall over the month of June, and just to compound falls that we've seen over the last year or so, now down at 74 US cents. Is that driven by this global risk-off attitude?
Exactly. So the Australian dollar is a bit of a barometer for global risk appetites. So when investors are taking a bit of money off the table, in particular emerging markets and Chinese shares, the Australian dollar is sensitive to that and typically falls. So what we've seen in terms of iron ore as well as copper prices, we've seen falls in June, and the Australian dollar has reflected that. So lower copper commodity prices typically see a lower Australian dollar.
Thanks for your time, Bob.
Thank you very much, Sinead.
And thank you for joining us. If you'd like further information, it's available on the website where you launched this video.